good morning, everyone. Welcome to our Friday morning trading session. It is Friday, isn't it? Yes, it is. I have to think about that for a moment. All right, let me get the screen sharing going on. We'll take a look at what's happening this morning. Yesterday, a very interesting session here on the NASDAQ. The market fell off a little bit out of the open. So after waiting it out for a little while, we saw, wait a second, where are we? Okay, so after waiting out for a little while, we saw the market make a couple nice moves lower, only to recover yet again, and in the afternoon session, look at that monster move off of this green bar sell, which is one of our high probability signals in the eagle. After that, however, things started to consolidate a little bit, and we actually saw the market try to recover a lot of that earlier move. By the end of the day, they finished kind of in the middle of the range, around the 48.50-ish mark, and that's more or less where we're seeing the market open this morning. And a little bit of a rally to start the day as well. Now this is interesting. Look at this. Trade forecaster is suggesting that we've got 229 minutes of trend this morning. Wow, that would be something. Almost 4 hours of trend. Would that not be nice? Well, let's see what they end up giving us. Crude oil also putting in a little bit of a rally, as are soybeans. Here's soybeans on the eagle. I guess the eagle will show us as good as anything. We had a market that's been fairly sideways the last few days. And currently we're printing a counter trend signal. So this may well develop into a rule of three. It's hard to say for sure, because while you may interpret this little hiccup down here as your test of the extreme, it's likely that we may see a deeper retest. So if we're going to try this as a rule of three signal, I would suggest trying to cover it below the low. You can see the signal coming and going, not complete just yet, may turn out to be a green bar sell. So soybean market a little conflicted, slightly, maybe just slightly bullish. And here was crude oil also on the eagle. Yesterday, a fairly bullish day overall, I guess. Nice little rally early on through the morning, then the market went flat, which is very characteristic of crude. And then here we are again. Since the London Open, a little bit of a rally. May end up moving sideways from here. But right now, as far as the NQ is concerned, I would be more bullish than bearish, I think. Still early, of course. Only a few minutes into the session. All right, here might be an opportunity on crude oil now. We're producing a red bar buy signal. Now, from the red bar buy, it is a potential counter trend signal. It tends to develop toward the end of a trend. So we've obviously had an uptrend. it's looking as though the red bar buy will try to retest the high. So we should get a test of the extreme in here. However, sometimes it's just as easy to set up to short the failure of the red bar buy. So in other words, once the signal completes, it's not complete yet, we only have a warning dot. But once the signal completes, we would short below the low, and because it's counter trend, we would try to cover above the high. Doggone crude oil, it's so expensive. All right, well, we would try to short below, and maybe I can cover above that. No, this is terrible. How tight do I have to make this trade to get trade going on here? What's up with this? All right, 1 second. Okay, I think there's something wrong with my settings. There's no way that's $1,700. All right, if you ever encounter this, that your trade manager is giving you a funny type of setting, go to your strategies window, uninstall your trade manager, and then put a new one back on. This is where it's very useful to have templates ready. All right, let's see what kind of settings I get now. There we go. That's more like it. So this is just a potential setup for crude oil. It isn't official yet. Like I said, we don't have the buy signal. We don't have the complete red bar buy. But it's something to keep in mind. So we'll watch how that unfolds. I wonder if crude oil is weighing a little bit on the stock index as well. We've got our macro pullback. We're producing a warning dot, a red warning dot here on the eagle, which, doesn't necessarily lead to a sell signal. I would love to see this get into yellow bars here on the hog. Okay, so we're in yellow bars now on the hawk. It takes a lot of pressure off of this macro pullback signal. 1, 2, 3. Well, you could treat it as a 4-arrow consolidation if you wanted. You see, it has a little bit of a bull flag type shape to it. Therefore, we may get a bullish break here. I may give this a try, but I'm not going to go in crazy. I think I dialed down my risk amount a little bit. So this is essentially a 4-arrow consolidation. Even though we've only printed 2 arrows so far, we've actually got 4 signals. 1, 2, 3, and this would be signal number 4 now. Now remember, the whole point of a 4-arrow consolidation is just the, oh, doggone, it looks like this one's doing the same thing. The whole point of the 4-arrow consolidation is the breakout from this bull flag. Oops, that's not what I'm... Oh, shoot. Hit the wrong button. All right, I wanted to dial this down to 1%. Let's try this again. No, can't do it. All right, what if we go there? And while that's going on, I think I'd better reload my other trade managers. See, when you have the template, it works out fairly easy. It's not that difficult. To take your trade manager off and put it back on. And I don't know why it did that. I may just need to reboot my Ninja as well. It's nothing serious, of course, just... Alright, so here they come. Let's see if we get a little bit of an uptick. Alright, so got my trade manager reloaded. See, the problem is it may retrace here to the hard edge. I'm looking for a test of the extreme, so one more little push higher before a possible failure. That's the plan, anyway. Really? Really, you're going to get that close to my break even and then leave me hanging? Come on, get up there. If I can get one more bar to turn bullish on me, I'm going to get really tight with my stops. In fact, I should probably do that anyhow. There we go. So let's roll our stops up here a little bit. There we go. We got the break even, and there we go. Whew, that was hard work. Had me going there for a moment. let's put that on the shelf. And here we are now with the Raptor. The Raptor and the Falcon, actually we're going to get a red bar buy signal that we could short here, but I'm going to point out a possible soft edge sell here on the Raptor. Now that we've had our retest of the high, I would be looking for a sell signal to develop. That would be our soft edge sell on the Raptor. Okay, so we've got a little buying going on. That's good. That confirms there's buying support. And here too, because it's early, you may choose just to go in with a single contract. Come on. There it is. All right, so the signal just engaged. This is counter trend. We should put the stops above the high. Because this is the point where we can say for certain we're wrong about the trade. Counter trend trades inherently more risky, and intuitively that should make sense. They're taking their time now. Oh, nicely done. Tony says he took the late filter entry signal here on the Falcon. The late filter entry, this one is actually coinciding with the trend change signal. So the trend line changes color. It goes from green to red. And we have that characteristic little down, up, down pattern. And we also have a late filter entry signal where the filter goes out of sync and then comes back into sync. So this one also, you'd be probably covering above the high. Suppose you could cover it a little bit tighter even. A break of this little swing high is going to put the trade in a bit of a twist. Because overall, we do have a market that's been in a little bit of an uptrend. Let's clear that. Okay, a possible first micro macro cross getting ready here on the hawk. And this one too, smacking of a little bit of a counter trend trade. So there's the first micro macro cross. You should cover above the high. Again, not a trade you want to go in too heavy on. The market's still kind of searching for some direction. I think a move lower is feasible. Buyers aren't out of the game yet either. Come on down. Here we go. Come on. Come on. Oh, just about to kiss that break-even trigger. There we go. All right. Well, I don't feel bad about scalping out of those. You know, when in doubt, take your profit. All right, I think I'm going to get a little bit more aggressive with these stops as well. The sellers are just taking their time here if they don't get it in gear pretty quick. I suppose I could leave it a little bit further back. So really holding up here around the 48, 49, 48.50 area, which I do believe was a rather influential number yesterday as well. Really disappointed they didn't trade a little lower here. If I get one more bar lower, I'm really going to start to jam those stops in tight. Because now we're getting a real bull flag look to the market again. All right, let's go with a parabolic, I think. No, can't do that. Bar high-low then. So I'm just going to squeeze the trade here a little. If they reverse above this last little swing high, then we're going to have a higher low relative to this previous low. Might cause a rally. What an indecisive bar. The market is just perfectly balanced right now. Let's see. Russell's asking, what do you think about the eagle signal? Well, we're just printing a warning dot at the moment, so the signal itself is going to print right here at 48.52 3/4. The market is definitely bullish. I would say it's worth a try. I would have liked to have seen it produce here off of the hard edge. There's not a lot of structure here. That's the problem. If we wait for the ATR to flip over, we're probably going to enter around 55.5 or so. That would allow us to cover the trade perhaps at the hard edge. However, that brings these highs a lot closer into play. But yeah, I think we're going to see a little bit of a rally here. It's not likely the buyers are just going to walk away from this trend here. So if I chose to take it on the hash mark, the advantage is that I've got a little bit of room to gain some profit before the market encounters the high. The problem is, where do I cover the trade? So if I take it here, I guess I got to risk it somewhere around there anyway. You could always wait for a second push on the entry as well. The second push simply means we allow the signal to print, and then we look for the market to flinch, to move away from the signal. Similar to what it's doing now. And then place our entry above the high. All right, here we go. So notice we're currently still against the ATR. Once we flip over on the ATR, that will make the market a lot more bullish. In fact, Mike Filigera, who you've heard me mention from time to time, he really loves, he was the fellow who put me onto the ATR on top of the Eagle. And he'll actually trade the ATR flips on the Eagle. So when the band is bullish and he's got a blue ATR, he'll just buy, signal or not. And you know, you can see for yourself sometimes that results in some very pronounced moves. So at least according to the ATR, we've still got a little bit of a bearish bias on the market because we're just below the ATR, the average true range. All right, so this next bar, if you're waiting to flip the ATR, would be the signal bar. The high of that bar will be 48.55 half, so your signal should come in around 48.55 3/4. Celice is asking about the ATR. No, the ATR is actually part of your trade manager. Let me show you how to, I'm not going to mess around with that chart because we have an active trade going. But let's take a look here at crude oil. So to turn that on, it's really quite simple. If your Eagle chart looks something like this, and you would like to use the ATR, you can do one of two things. You can either dial in your ATR on your trade manager to 2.0 and use that kind of as your filter, or if you like the squiggly red and blue line, go here to your indicators And now pull down to your indicator assortment, and you're going to find one that says IWTM ATR Trail. Now this is actually what the trade manager uses to plot your stops. You can see you can use other ones. You can use the chandelier or the percentage or super trend, whatever. Double click on that. Click apply. You don't need to change any of the settings. And I'll make it a little darker so you can see it better. And there you go. Now, with anything that you add to your chart, the acid test is always, does it help you make a decision? You know, people have their favorite indicators, they have their favorite tools, and they are just that, they're tools. Do they help you do your job better? Then yes, by all means, put it on. And I do believe the ATR does help us do a better job on our eagle signals. That's why I have it on there. Sometimes it will keep you out of a signal that's not in sync yet, like here's this crude oil trade. But sometimes you need to take the trade a little early because of the logistics of the trade. So for instance, here on the crude oil trade, if I take this trade early on the hash mark, I'm still against the ATR, but I have an opportunity to perhaps adjust the trade or maybe even take profit before we encountered the high here and then of course the high up here. So in this instance, it makes sense to try to get in early. If I waited until we flip the ATR, then this now becomes my signal bar. So I would enter above there, but note the proximity to the swing high here and the swing high here. There's not a lot of room to do anything with the trade. Yes, the momentum is now on your side. You could probably get by running a stop, something like that. However, we've essentially got a double top here. You know, it may turn the market yet again. So by getting a late fill, I can't do anything with this trade. If this market turns, I'm pretty much going to be committed to a full stop out. Whereas if I had taken it earlier, say set up the trade like this, and let's say this bar finishes on the high and then the next bar turns, well, I can do something with my stops, right? So let's say we go like this and then the market does one of those. I can do something with this. I can take my stop from down here. I can perhaps even take it to break even, or I can roll it back a little bit or even cover it at the hard edge. So if I do get stopped out, if there's a full-on reversal now, I'll get stopped out to be sure, but it'll be about approximately half. So let's say about $200 stop out versus the full $400 that we were looking at. But by entering late or later, don't have that option, right? I'm still like this, the market turns. What do I do with my stops? Where do I put them? I don't really have anywhere of structure that I can place my stop. I may choose to roll it up halfway and say, all right, well, if the market retraces more than halfway, I'm out. But if anybody who's ever followed fib levels know, the market has characteristically made a half to two-thirds retracement only to, continue higher. And again, you'd get stopped out early, prematurely, only to watch the market rally along without you. So sometimes it's to your advantage to take the earlier entry, and other times when you're in doubt, it's better to hold off for the ATR to be in sync. So for instance, here is a rule of three signal, 1, 2, 3 signals. We're producing red bar buys. We've got lots of room to the top, to retest the top. So there's really no reason to enter before the ATR flips over. And here's a couple red bar buys, which are high probability signals, but you should also be looking at this and saying, oh, wait a minute, we're producing counter trend signals as well. So here's an instance where the ATR potentially kept you out of a bad trade. Here's another ATR flip on the Eagle, which is confirming the trend change signals. We're getting several, as a matter of fact. I suppose this is the first one here, the first trend change signal, followed by a second one, but it's in sync with the ATR, so that would give you a fair amount of confidence to try to buy this market up. Good question, Elmer. Elmer asks, Eric, a question that's a little off track. Have you heard anything about the change to NinjaTrader 8? And will it take place eventually? Well, eventually, yes. I haven't heard anything about the timeline for Ninja 8. I think they're still working out a couple of the bugs. Once it's stable and it's released, then Indicator Warehouse will make sure there's no programming conflicts with any of the indicators that Indicator Warehouse has. The problem with trying to fix any of the bugs now is, of course, they're reprogramming everything all the time. And you may fix it today and it not work again tomorrow because they've done something else. So once Ninja 8 is stable, then we'll look at going into the new software. I'm not, as you can tell, I'm not a fan of, beta testing. Been there, done that, as they say. So we've got some fairly serious resistance now on the highs. Hopefully this does not turn into a double top and a test of the extreme. I think I'm going to get a little bit more aggressive with my stops here, though. Wow. Still got 3 hours of trend left. The market's relatively slow, even though it's already been 45 minutes since the open. Sellers trying to step up now, take advantage of that double top. Oh, they're pushing pretty hard too. Wow, they're pushing really hard. Possible soft edge sell here on the Raptor. It's printing right on the band, which makes it a little bit difficult to see. There we go. Let's see, good question here from Tony. Tony's asking about crude oil on the Hawk. Eric, looking at crude oil on the Hawk, where do you consider the bullish trend finished? Well, there's two things that you need for a trend. In an uptrend, you need a higher high and a higher low. So long as the market is making higher highs and higher lows, technically you're in an uptrend. And we usually refer to the swings, the higher swings. When the market starts printing lower highs and lower lows, then it's technically in a downtrend. But you see, we've got the market flip-flopping a little bit here, hence all the yellow bars. So I would say the uptrend is over when this violation took place. When the market was no longer able to contain the lows or recover the high. This, I suppose, would confirm that the uptrend is over. So we've also got an interesting thing going on here, where we've got a little bit of a, I know you could draw a channel like this as well, but we've also got a little bit of an expanding market. This tends to happen near the end of a trend also, where the market will flip-flop like this and probably end up reversing on itself. But like I said, you can draw it this way as well. And it will be the same thing. So working a possible first micro-macro cross, the macro line's still out of sync, but there's a possible short coming in crude. Problem is you got to cover it at least above the high. Make sure you leave that upper trend line in there to give you a hint where, if the market drifts higher, where the sellers are more likely to step in. But until we get that pattern re-emerging where we get higher highs, higher lows, or lower highs, lower lows, we have no trend. So that's where we find ourselves right now, trendless. Paul's asking, would that have been the test of the extreme? I think Paul was referring to the double top here, and yes, sir, definitely. This would be the test of this extreme. most certainly. Now, the thing with the test at the extreme, I know it confuses people because it can be a little subjective, and I don't mean to sound flippant, but if it looks like a retest, it is a retest. So we had a retest at this point, and you could consider that a test of the extreme, and that would make this a soft edge sell signal. The fact that the market gave you a little bit more heat and retested one more time before coming back and giving you another sell signal does not negate this here as a test of the extreme as well. Sometimes it just needs a little bit more room to sort itself out. It's a lot like, a ship. They don't turn on a dime. And you can see we're getting some very nice follow through from that. Hooray for us. All right, and while that was going on, we did get tagged here on that little bit of a reversal. It was a worthwhile trade. The higher probability trades do come off of the hard edge, however. You've probably noticed when the market actually engages the hard edge and prints a signal. This one was kind of mid-band. But even just rolling back through your chart, that's one of the good things about trading is you've got loads of examples, right? You can always just roll back in your chart and say, oh yeah, it hit the hard edge and came down, hit the hard edge and came down. This one kind of hit the soft edge. All right, not as much follow through. So here we are now into the hard edge, and we would anticipate a reaction. All right, they're looking for some sort of direction here. Overall, we're more or less sideways today. Crude oil dead sideways. I know we were just looking at crude on the Hawk, but here's crude on the Falcon. Very tight little sideways range. Not sure crude will commit to anything big before the weekend. Yes, I would agree with Tony's comment here. He says the London Open, the overnight, seems to be a better market for crude oil of late. This is just on the Eagle. We actually got better signals on the Hawk and the Falcon, but yeah, they seem to be, well, yesterday not so much. But I noticed that too, that a lot of times the overnight in crude has been very active, some decent follow through. Then you get into the North American Open and sometimes they just fall flat on their face. Normally the Europeans are trading Brent crude, not the CL. All right, an interesting situation here on the NASDAQ. We're into the hard edge on the Eagle, in which we expect a bullish signal to come out from there. However, we're getting a macro pullback signal here on the Hawk. A possible cloud crossover signal on the Raptor hasn't printed yet. And we've got a fairly bearish Falcon as well. So what do we do with that? Well, you got to play the probabilities of the signal. The Eagle signal hasn't printed yet. Oh, I should mention that sometimes, excuse me, Stephanie, when she was with Indicator Warehouse, was always a huge advocate of using the Eagle as a guide. So in other words, if the Eagle was bullish, she was looking for buy signals. And that's not a bad way to go. If you're conflicted, I suppose you could look at the Eagle and say, okay, well, the Eagle is bullish. I'm producing a sell signal here. I'm going to avoid the sell signal. But at the same time, I think it's important that you play the probabilities of the signal. Now, I don't suggest that you go long one and short the other. You could just, normally what I do is whatever signal fills first is the one that I take. You can also look at things like a second push on the entry. Where, again, you allow the signal to engage. Oh, now we're into yellow bars. I don't need to worry about it. But just for example's sake, if I was anticipating a macro pullback signal to print, I could allow the signal to print, let it flinch, move away from the signal, then place my entry below the low of the bar and cover the trade. But now we're into yellow bars. So we've got an opportunity here on a second push now for the Eagle. So the signal has printed. The ATR, everything's in sync. We should see a possible retest of the high. All right, did they slip? No, they didn't slip. That's good. Okay, they're trying. We should at least see the market try to get up here to 48.55. That's not unreasonable. Come on, get up there. And I think we're going to end up doing something a little bit more aggressive. We can get a couple of bars to finish. There we go. Come on. Oh, they're just fighting at that trend line. There's going to be some selling there. If we see it break out through the high here, we should get some follow through. At least to the 57, 58 mark. So I think I'll bring my stops in a little bit. My break-even stop. what a struggle. Come on, get up there. Give it a little push with the mouse. Here we go. Come on, just break through that trend line and we'll be fine. I don't think this market could be much more balanced than it is. See, I think what's happening here now is we got some selling from the people who bought late, people who were buying here and up here, and they're seeing the market flounder, so they're thinking, oh, well, we may as well just take profit or get out at break even or a small loss even. And what that's doing is it's actually adding to the sell orders and reinforcing this whole 48.55 area. Plus, we've got sellers looking at this as a trend line, thinking, oh, that's a good place to sell. Let's short from there. Tony's got a question here about the mid-cap. Hold on one second. I've got to load the mid-cap. All right. So Tony's asking about the mid-cap here. Eric, on the EMD, that's the mid-cap, the S&P 400. In the Falcon, you will notice the trend change. It often happens that the signal happens early while still in a red trend line. ATR is buy, and it looks, quote unquote, like a buy, but no signal yet. Any comments? All right, let's take a look here. So if we go back the last couple of days, it looks like we are getting a solid trend change signal. That's this bad boy right here. Looks like there's decent follow through, then we get a trend change signal to the upside, or you may have considered this a trend change signal as well. Either way, looks like it had some decent follow through. And then we get into today. So we had a trend change here. We had a trend change here. And I think what Tony's referring to might be something like this. Yeah, okay, Tony says yes. Saying, what about something like this? Where the trend line goes out of sync, but we're producing a buy signal. Well, Tony, in instances like this, you can actually default to the price structure itself. It's not a pure signal, to be sure. Everything's gone out of sync. However, the pricing itself shows you that you've got a higher swing low. The market is consolidating a little bit, right? We're getting a little bit of a lower highs as well, a couple lower lows, but now it's trying to make a swing high. Is it one of our high probability signals? No. Is it a valid signal? Well, yes, in a way, because we are producing a higher swing low. So now this is more bullish. We are producing a buy signal. The filter and the trend line not in sync. If you chose to try to take that signal, I think what I would do is I would dial down the risk, and I would certainly try to cover the trade below the swing low if I could. Because you're basing it on the price action itself. Now, ultimately, price is the greatest indicator, but sometimes, you know, you can fool yourself, or you can see something that isn't really there. You know, like here, you may be looking at this and saying, well, you know, should I consider this a late filter entry? Well, technically it's not, because the trend line did go out of sync, and as it turns out, it made a rather abrupt reversal. So when you're taking a signal that you're not entirely sure on, try to dial down the risk amount and try to leave yourself as big a stop as you can afford. Well, whatever, you get the idea. But yeah, this type of thing is going to happen when the market's sideways, where you're going to see the higher swings, the lower swings, and you're going to, in your gut, is going to say, oh, I bet you it's going to do this. And then, of course, it does it, and you kick yourself and you say, well, why didn't I take the signal? Well, what's happening is your subconscious is learning about the price itself. You're starting to recognize what price is likely to do before it does it. But for your best trades, I recommend you stay with the high probability signals. And if you choose to make a little modification, really control your risk. Dial it down, you know, throw a onesie on it. If it works, great. If it doesn't, well, at least you haven't damaged your account. And those are the kinds of things that come to you, you know, with screen time, being on the computer, watching the charts. Come on, don't quit now. Where's that resistance line here? All right, so we took a nice little bounce off the primary resistance, making a little break of the secondary resistance. You can see we got tangled up here a couple times before around the 48.60 mark. 48.65 half should be our objective. Obviously, I'm not giving them a lot of room to reverse on me here. We're starting to get that expanding type look to the market as well. As I mentioned, these things tend to happen toward the end of a trend. Crude oil still very, very quiet. do my bad Elmer Fudd impersonation. It's very, very quiet. Well, we're just kind of humming and hawing here now. I'm a little concerned about the expanding market. We are getting a macro pullback signal here on the hawk. We do have an opportunity to take it on a second push. Problem is that's where our initial stop should be at, because there's not much structure down here, right? Oh, here, we'll throw this order in. We'll sim this one. Definitely something you're going to want to scalp in and out of. And hopefully it'll get up to our break-even objective. Well, we've hit the break even. Oh, whew, wow. I was wondering whether or not they were going to be able to get up there. But see, again, you play the probabilities of the signal, right? As unlikely as it may appear at the time. That's why we focus on the high probability signals. And again, why you need to consider the context of the chart as well, right? When you got a chart that's all messed up, all going sideways, do yourself a favor, use a little extra caution. Don't go in so heavy. Try to run a deep stop. Give yourself every possibility of realizing a profit and not a loss. And I think that's going to be a good note on which to close up shop today. There's nothing else really going on at the moment. If you are going to continue to trade today, well, I would be cautiously bullish. The market obviously in an uptrend, but the way the market is expanding makes me a little leery. Right? So we've got the market kind of growing wider, and these kinds of things tend to happen as the market unwinds. But hey, overall, not a bad day at all. All right, boys and girls, we'll call it a day. I will see you next month, and have yourselves a wonderful weekend. Bye for now.